But let's start this morning with some immediate live reaction to the events in Russia from the government. I'm joined now by the Chief Secretary to the Treasury, that's John Glen. Good morning, Mr. Glen.
Good morning, Trevor.
Now, the Government Emergency Response Committee, COBRA, met yesterday.
Yes.
What is the government's understanding of the situation in Russia this morning?
Well, you're right. COBRA was convened, chaired by the Foreign Secretary. This is fundamentally an internal matter for Russia. Obviously, observing it, it is obviously a very unstable situation in Russia, but it is fundamentally an internal matter. And we've obviously urged, alongside our allies, which conversations have been had over the last 24 hours, that obviously civilian interests are considered, and they seem to have done that. But this isn't a matter that we would be intervening in, but obviously we observe and monitor the situation on an ongoing basis very carefully.
Well, look, I know that the diplomatic language is it's an internal matter, not for us to comment on and all the rest of it. But doesn't this alter the equation in Ukraine, where we have invested billions and where we have an interest?
Well, we as a government have been committed from the start on supporting Ukraine in their battle against what Putin has done, and we will continue to remain focused on that. We continue to train troops, support with military support, and we're united with our allies in leading in that effort. That will continue. That is a separate matter to what's happening in Russia over the last couple of days.
Did I hear you say we've sent troops to the Ukraine?
We've been training troops. I visited them in Salisbury Plain just this week.
OK. So this involves no interruption or indeed no escalation of our effort, because there are some people who would now say that actually this might mean an escalation by the Russians in their assault on Ukraine. The Wagner mercenaries are now, we understand, being integrated with Russian troops. So might this be the moment for a bit more support for Mr. Zelensky and his team?
Well, we will work very closely with Ukraine as the situation's evolved and as it has evolved over recent months. And that is our primary focus, supporting Ukraine deal with Putin in whatever form that attack takes. And it has evolved over recent months. So nothing has changed with respect to the British government's position in supporting Ukraine. I obviously recognise these are concerning events of what's happened in Russia, but as I said, we will remain very close to our allies. COBRA has evaluated, alongside our allies, what has been happening and urged concerns of civilians to be taken into account. But this isn't something that we would intervene in. It's an internal matter for Russia.
All right, well, let's talk about the things that are internal to us under your control. The economy. Let's start with that. Inflation in this country is running much higher than in comparable countries. We compare, for example, with the Eurozone and the Americans. The Americans down there at 4%. But it's not actually just the level, but the fact that the Americans' inflation is down a bit, the Eurozone is down a bit, ours is stuck at 8.7%. Now, we know the Bank of England has got its one club, interest rates. They've put on 50 basis points this week. Let's talk about what the government can do. Give me one thing that you, in the Treasury, are doing to tackle this inflation.
Well, as Chief Secretary to the Treasury, my responsibility fundamentally and primarily is to control public spending. And that is an incredibly challenging job at this time, because obviously we had a 3-year comprehensive spending review 2 years back. And obviously these inflationary pressures bear down across all our public expenditure, on capital expending and on day-to-day expenditure. But keeping a grip on public spending, making tough decisions on reprioritisation, putting an efficiency and savings review into the preparation for the last fiscal event, the last budget. And you will know, obviously, that the Chancellor asked me to lead a productivity review, which I'm now undergoing, and that will happen over the next few months, looking at how we can control public spending at a very difficult time as we still deal with many legacies from COVID.
All very sensible, but explain to me how any of that has any bearing on that 8.7% figure in the next few months, which is when it's hurting.
Well, I can understand, and I really do understand, because I obviously have constituents who email me who are concerned about the implications of higher interest rates for their household budgets. But there isn't a single quick lever that I can give you a soundbite.
I'm just asking you for one contribution.
Well, I think there are three elements to the government's response. The independent monetary policy interest rates, which you've described, controlling public expenditure, and then helping with those additional costs. So we've helped with those energy bills, and we extended that in the spring budget. But I would just want
but the energy bills are coming down anyway. The big thing here is mortgages, isn't it?
Can I just point out that I think by putting one screenshot on your screen, you failed to show the fact that the interest rate pressures across Europe and across many of our allies, Australia, Canada, US interest rates have gone up the fastest rate since the 1980s. Yeah. This is a common experience. Now, you're obviously rightly asking me what's happening in the UK, and I'm telling you that, but what I am saying to you is there isn't one single thing I can do sat in Whitehall that's going to resolve this in 1 month.
OK, fair enough. But I did make the point that actually the problem for us is that ours is stuck, where others are going down. Let's interrogate some of those things.
Please.
Let's start with the Bank of England, by the way, where you don't have control over what the Bank of England does.
No.
But you do have control over who is running the Bank of England. And your Transport Secretary colleague, Grant Shapps, told my colleague Sophie Ridge, Mark Harper, I beg your pardon, told my colleague Sophie Ridge earlier on this week that he thought that the bank had been too slow.
Well, we remain in the Treasury completely aligned to the bank. They, as you say, have responsibility for interest rate policy. They've had that for over 25 years. And if you look at it over those 25 years, they've been pretty effective in keeping it to the 2% inflation target. These are incredibly difficult times, and they have made their decision. The MPC committee made that decision last week, and we work closely with them in lockstep with them. They are independent of us, so they make those judgments, and you wouldn't expect me to comment on that.
Yeah, they're independent of you, but you appoint the head. So from what you said, Andrew Bailey's safe in his job for the time being.
Well, he had an 8-year term. I think he was appointed at the end of 2019. I worked very closely with Andrew in a previous job when he was head of the FCA, and we support him in taking the decisions necessary.
Right, so no P45 in sight for Mr Bailey. Can we deal with one other thing where there are a lot of noises off? Can we stop talking about tax cuts now? That's not going to happen, is it?
Well, you know that we never talk about measures before fiscal events. Obviously, the headroom that we had at previous fiscal event in the spring is now in a different state because of the interest rate payments that we have to pay. You know, basically, we shut down the economy. We spent a lot of money. When we came out of COVID, we had a lot of debt interest to pay. That has gone up because interest rates have gone up, and that makes our public finances very challenging. Two significant, once in 100 years and once in several generation events of war in Europe. The government is here to deal with whatever circumstances are happening, and we are taking the right decisions at a difficult time, as the IMF indeed endorsed in their recent assessment of the UK economy.
I'm taking that as an answer that tax cuts are not on your agenda.
I think the Prime Minister's made very clear, the Chancellor made very clear that our priority is halving inflation. That's the dominant threat to the UK economy, and that's what we're most focused on at this time.
All right, let's deal with something that is absolutely in your control. One thing that wouldn't help inflation is a big increase in energy bills. And Telegraph is reporting that the £170 a year green levies that were temporarily removed are going to come back onto bills next month. Is that true?
Well, we're making assessments all the time of how we can deal with the challenges of supply across the economy and the different input costs. I can't confirm that this morning, but we are looking carefully at everything. The Chancellor will be meeting with regulators next week. And we met with the FCA and bank lenders, for example, on Friday to deal with the pressures that households are facing with their mortgages. And we will continue to do everything we can across all departments of government.
So I'm taking it, no decision's been taken, but the restoration of that levy is on the table?
Well, in the sense that when governments are facing really challenging times, all decisions are looked at in terms of what we can do to make the situation better whilst continuing to recognise that halving inflation has to remain our priority. That's the lens that the government is consistently and unitedly focusing on.
Okay, one way in which you could make life easy for yourself is if banks were to pass on the rate rises to savers in the way that the mortgage increases are passed on to mortgage holders. Rachel Reeves has written to the Chancellor saying that there should be action from him and regulators to make sure that savers benefit from the change in interest rates. Good idea or not?
Well, I recognise the concern that exists. The Chancellor himself has recognised that this is something that we're monitoring very carefully. He's met with the FCA and the banks on Friday. The primary focus was dealing with the implications of the higher interest rates in that conversation. And several positive things came out of that in terms of the opportunity to go to interest only for 6 months, to have conversations with your lender and not prejudice your credit rating, as well as delaying repossession from the first time you miss a payment. That was a constructive set of conversations, and we'll continue to look at the gap, if you like, between the interest on savings and the headline rates.
All right, well, look, let's talk about something that's in your personal purview, and that is, you mentioned it already, public sector pay. Now, if you want to keep public expenditure down, a big chunk of that is pay. The Times is reporting that the Prime Minister is going to overrule the independent pay review bodies and block the recommendations for the next round of pay sector awards of around 6%, 6.5%. Is that right?
No, what happens is we have the reports of the pay review bodies. Most of those have come in. And then we look at those and make an assessment. Now, obviously, in some of the disputes we've had in recent months, they're near to resolution. We've obviously very pleased that several of the NHS unions have agreed the agenda for change deal, 5% and then 4%, and some different changes across working practices. And we will look at those pay review body reports, and that will be the Prime Minister and the Chancellor working together with input from me on what the right way of resolving this is.
OK, let's just get this clear, though. You guys have been saying for the best part of a year, when there were strikes, wait for pay review body, we will support what the independent pay review body says, we have to accept what the pay review bodies say. Are you now telling me that actually it's not quite that, we are going to look at what the pay review bodies say and we may accept it?
No, what we're saying is that we haven't had all the pay review body reports.
No, but as a matter of principle.
As a matter of principle, pay review bodies are a very significant part of resolving the pay issues. But obviously, we've also got to take account of the effect on inflation. That would be irresponsible not to do that. So we haven't finished that process, Trevor.
Forgive me if I bang on about this, because last time I was sitting here, I can't remember which of your colleagues was saying this to me. Pay review body, got to go with pay review. And that was when actually the pay review was recommending something lower than what the unions wanted, and it was all fine then, in principle, to support the pay review body. What you're telling me this morning is, it's just one factor. We've got to think about other things.
No, what I tried...
Is that other pay review bodies' recommendations only sacrosanct when they benefit you guys?
No, what I'm trying to tell you is that I can't give you the conclusion of the pay review body review process.
I wasn't asking you for that.
Can I answer? I can't give you that yet because we haven't finished that analysis. But what I'm saying to you is at the same time as we're looking at that, we're also aware of the implications for inflation. And that is critical and the Prime Minister's top priority, as set out at the start of the year and as he'll be saying in interviews today. OK,
I'm sorry, I don't mean to be rude, but it's just that the last time I spoke to one of your colleagues, they weren't waiting for the pay review bodies to report. They simply said, we'll accept what they're going to report.
But as you can see, with some of these pay review bodies and the implications and the distribution between a non-con payment and the whether you do it over 1 year or 2 years, these are factors that are relevant. It's not quite as straightforward as that.
OK, your colleague Gillian Keegan over at Education says that big pay rises for teachers would be inflationary.
Yeah.
And I'm quoting her here. Our ongoing strikes, to quote language from an earlier era perhaps, ongoing strikes, a price worth paying to keep pay and inflation down?
I don't think anyone wants to see strikes across any of our public services. I understand what leads to that situation, but what the government's got to do is take responsible decisions on public spending in the round. Pay is a significant element of that, and obviously I'm very aware of the massive contribution that teachers, nurses and public sector workers make, and we have got to get the right outcomes that are fair to them but also aren't inflationary. And as you put up on that initial slide at the start of our conversation this morning, inflation is going to be tough to get down. It's something that we're focused on, and we are united and determined to do so.
John Glen, thank you very much for your time this morning.
Thank you, Trevor.